This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that bullish American consumers are pushing back the likelihood the US Fed will cut its policy rate anytime soon. Financial markets now price in only 2 cuts this year, one in September and one in December, and far less than the 4 priced in at the start of the year. And the conviction for these scaled-back indications is easing rather fast. The latest pricing suggests the September one might still happen, but there is more of a chance the December one will be skipped. And that is because American retail sales posted impressive results in March, and February's results were revised sharply higher. Those revisions mean they were up 2.1% in February from a year ago, up 4% in March on the same basis. Consumer spending belies consumer sentiment. What they do is way more positive than what they say. Meanwhile, overall February business inventories remain in good control, holding their relative level to sales. There is no build-up of tensions on this front. On this data, the US dollar rose yet again, bond yields jumped again, and equity prices packed a sad that they are unlikely to get the rate cuts they were banking on. It is not all positive, however. The New York Fed's local factory survey reported that both new orders and shipments fell significantly in March, and unfilled orders continued to shrink. Optimism amongst these businesses is subdued. And we should note that car maker Tesla is cutting 10% of its global workforce, or 14,000 jobs, on stuttering sales and profitability issues. Its share price fell another 5% in today's trading to be down 35% so far this year, down 59% from its peak in November 5, 2021. And Canada reported manufacturing gains in February from January, and even small gains from a year ago levels. Those gains, tiny as they are, also came out when inflation adjusted. In China, a new industry report from a corner of their economy details just how tough it has become to make deals there. Pay at China's private equity and venture capital firms plunged as much as 40% year on year in 2023, as the industry's downturn showed no signs of abating. And just for the record, the People's Bank of China had its monthly review of its benchmark one-year medium-term lending facility rate yesterday, which is the main rate which the central bank lends to big commercial banks, and it held it unchanged at 2.5%. In Japan, machinery orders jumped 7.7% in February from January, reversing the 0.7% fall in January, and far exceeding market expectations for just a 0.8% gain. That put them a healthy 9.4% higher than year-ago levels. In the EU, industrial production rose again in February, making it the third rise in the past 4 months. Analysts were expecting this type of improvement, though. But despite this month-on-month rise, they still have some way to go to convert that into year-on-year gains. And we should also note that the rise of the aluminium price over the past 8 weeks took a sharp turn higher yesterday, taking it back to June 22 levels. This shift is largely due to sanctions biting on Russian supplies. In Australia, employers and unions are close to a national agreement that will allow workers to take double their holiday time off at half their pay. There are still details to be agreed, but the principle for this flexibility is being set. The US Treasury 10-year yield is now at 4.63% and up 11 basis points from yesterday, and the price of gold will start today higher by $20 at $2,363 an ounce. And despite continuing Middle East tensions and uncertainties, oil prices have slipped 50 US cents a barrel overnight to $84.50 a barrel in the US, while the international Brent price is unchanged at $89.50 a barrel. And the Kiwi dollar starts today at just over 59.1 US cents and down 20 basis points from yesterday and a 5-month low. Against the Aussie, we're also down 20 basis points at 91.7 Australian cents. Against the euro, we're down 20 basis points too at 55.6 euro cents. That all means our trade-weighted index starts today at just under 69 and down its own 20 basis points, and that is a 10-day low. And the Bitcoin price starts today marginally firmer at $64,004, up 0.3% from this time yesterday. Volatility over the past 24 hours has been moderate, at just on plus or minus 2.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.